it brought in the Department of War, which is effectively the Department of Defense, in terms of being a strategic partner. They've acquired a 5% stake from Trilogy, but also 5% from our partner, South32, who owns $35 million approximately, go into the JV, which will allow the project to continue to advance. But more importantly, what we have is we have the federal government as a strategic partner focused on ensuring that this project moves forward in an expedited case as quickly as possible. So we're very excited about that. Share price has performed very well on it. The value of Arctic in the context of a current metal price environment is on a 100% basis, well over $4 billion on an after-tax basis. It's a spectacular deposit. And what's been interesting about metal prices is that copper had a historic day yesterday, all-time highs in terms of trading around 14,000 on the LME, 650 on COMEX. Gold was well over $5,500. Silver was $121. So commodity prices have run up. I think today is, on the back of a bit of retrenchment, which is not necessarily a bad thing. October the 6th, the president signed a presidential decree that he was entitled to sign under legislation in Alaska called the NILCA. And what that did was effectively reinstate the record of decision for the Ambler Road. It's very exciting for us, and it really allowed, a couple things to happen. I think a lot of what's been happening with Trilogy and really the turnaround that's happened in the story has largely been due to, the focus, particularly in the U.S., on domestic supply of critical metals. And we're a company that has two very strong high-grade projects. We have a project called the Arctic deposit, which is a volcanic massive sulfide deposit. And as Dunnigan, as you set out, it's precious metals, gold and silver, but as well, it's primarily a copper project with zinc and lead as well. Then we have a second project called Bornite, which is copper cobalt deposit. Now, Arctic, the one that we're most focused on right now, and it's advancing quite nicely. We have a feasibility study on it. The value of Arctic in the context of a current metal price environment is on a 100% basis, well over $4 billion on an after-tax basis. It's a spectacular deposit. And what's been interesting about metal prices is that whereas Arctic was typically seen as a copper zinc deposit, in terms of actual contribution of revenues now, it's more of a copper precious metals deposit. So roughly 55% of the value comes from copper, and about close to 30% now comes from precious metals, with the balance coming from zinc and lead. So there's been a real turnaround just because of what's been happening in commodity prices. And today, Friday, June 30th, as you set out, it's definitely a red day in the market. We're seeing a big correction in precious metals in gold and silver, and copper had a historic day yesterday, all-time highs in terms of trading around 14,000 on the LME, 650 on COMEX. Gold was well over $5,500. Silver was $121. So commodity prices have run up. I think today is, on the back of a bit of retrenchment, which is not necessarily a bad thing. You need to see some pullbacks happen. That is a very healthy part of a market. And I think what we're seeing today is just a bit of consolidation that's going to be happening. But I think a narrative for the metals that are part of the Trilogy portfolio in terms of Arctic and Bornite is still very, very robust. And it certainly feels like we're at the beginning of a very strong bull market in metals, whether it's precious or strategic metals like copper, in terms of where things are going.
This segment establishes the massive scale and perfect timing convergence. A $4+ billion after-tax project value on a 100% basis means Trilogy's 50% JV stake alone represents $2+ billion in value before any development. The revenue shift from 12% precious metals to 30% is seismic. It transforms the risk profile entirely. When copper was the dominant revenue driver, 57%, the project was vulnerable to copper price volatility. Now, with gold and silver contributing 30%, there's natural hedging across multiple bull markets. Copper's all-time high at 14,000 a ton validates the strategic metals thesis. Gold over $5,500 and silver at $121 aren't just good prices, they're regime-changing levels that make previously marginal deposits highly economic.
It really started with the election in 2024 and with President Trump being elected and really highlighting a focus on critical metals and domestic supply of these metals for domestic purposes, it's really changed the narrative. And right from the beginning, President Trump and his administration came out and talked about the importance of advancing projects. And in some of the executive orders that President Trump came out and discussed, he really focused on Alaska in particular, on unleashing Alaska and really allowing projects like Arctic and Bornite to move forward, and really focusing on critical infrastructure that was needed to do that, which, as you described, is the Ambler Access Road. So what happened since President Trump was back in office in January 2025 is a number of initiatives were brought forward, initially through Congress, to look at ways of effectively reinstating the record of decision that had been issued originally by the Trump administration in 2020. And ultimately, what ended up happening was in October of this year, fourth quarter, as you pointed out, October the 6th, the president signed a presidential decree that he was entitled to sign under legislation in Alaska called the NILCA. And what that did was effectively reinstate the record of decision for the Ambler Road. It instructed all of the relevant agencies to issue all the necessary permits to ADA, who is developing. ADA is a development agency in the state of Alaska who's developing the Ambler Road. And those permits have now been issued and really focused on advancing the project in an expedited fashion. Now, what we understand from ADA is that the legislation that was used, or the presidential decree, which is called 1106 in ANILCA, is not subject to being overturned by the courts. Now, we'll see how that plays out, because you never know with these things. But at this point, what we understand is that the president's decision is final. It can't be overturned by a future president, because his ability to provide this presidential decree was because a permit had been denied.
The Department of War taking a direct equity stake is virtually without precedent in modern U.S. mining. This isn't a loan guarantee or tax incentive. It's the Pentagon becoming a 10% owner, 5% from Trilogy, 5% from South 32 of the joint venture. The $35 million cash injection is significant, but the strategic value is incalculable. The U.S. military now has a vested interest in seeing this mine succeed. This guarantees expedited permitting, regulatory support, and likely infrastructure funding. The timing with J.P. Morgan's $1 trillion critical metals fund is revealing. Wall Street recognizes the supply crisis. When the military and Wall Street both move simultaneously into critical metals, it signals a structural regime change, not a cyclical trade.
Previously. So it's very exciting for us, and it really allowed a couple things to happen. It brought in the Department of War, which is effectively the Department of Defense, in terms of being a strategic partner. They've acquired a 5% stake from Trilogy, but also 5% from our partner South 32, who owned previously 11%. Now they own 6%. So when the deal closes, it's expected to close in March of this year. We would see some $35 million approximately go into the JV, which will allow the project to continue to advance. But more importantly, what we have is the federal government as a strategic partner focused on ensuring that this project moves forward in an expedited case as quickly as possible. So we're very excited about that. Share price has performed very well since that happened. We had incredible movement in the share price in October 14th in particular, and I think it coincided with announcements about shortages of critical metals and an investment fund that was being started by J.P. Morgan of $1 trillion in critical metals. Since then, the share price has settled back, but is performing very, very well. We're in a strong financial position. Trilogy is sitting with roughly $50 million of cash. At the Trilogy level, there's additional cash in the JB, and once this money that comes in from DOW comes in, it will effectively fund our expected program for the current year. So we're in a strong position to advance the project, and we're really
Trilogy's $50 million cash position at the corporate level, plus additional JV cash, plus incoming $35 million from DOD, creates a fully funded development runway for 2026 without dilution. This is critical for shareholders. Most junior miners burn cash and constantly dilute. Trilogy is in the rare position of having government funding for their exploration and permitting work. The October share price spike to multi-year highs followed by consolidation is textbook bull market behavior. Retail investors who chase spikes get shaken out on pullbacks, but the underlying fundamentals, government partnership, metal prices, permitting progress, have only strengthened. Strong hands accumulate during consolidation.
Focused on upcoming catalysts.
The investment by the Department of War is interesting because we're seeing that in multiple metals areas. It's as though there was this big awakening that just happened industrially and militarily and strategically, that all of a sudden, having gone from a just-in-time global supply chain is the smart way to go to, oh my goodness, if we don't have domestic supplies of these critical materials, we're hurting here, here, and here, and here, including many different ways, medically, sometimes industrially, manufacturing, defense, etc. Do you have any expanding to do on that particular aspect of the changed I guess the zeitgeist, the time that we're in of realizing that countries of the world are trying to lock down domestic supply, and how fortunate it is for the United States to have such as Trilogy in Alaska with the rich resources that are available there?
It's a great question, and I think we're very fortunate that DOW has decided to make the investment in Trilogy. As you talk about domestic supply, I like to say domestic supply for domestic purposes. They want to see the metals being produced in the U.S. and ultimately being processed in the U.S. And they're looking at the critical nature of whether it's copper, zinc. Clearly, cobalt is one of them, but also the other metals that are there. And what they recognize that our district isn't about one mine. It's not about Arctic. It's not about bornite per se. It's really about the district potential that exists. And just to give you and the listeners a bit of color, the Ambler Mining District was discovered in the 1950s. So from the 50s to today, roughly 70 years, a total of 210,000 meters have been drilled in the district. Now that sounds like a lot, but if you actually divide it over 70 years, it's 3,000 meters a year. It's not a lot. And what we have is at Arctic, we have a deposit that's roughly 46 million tons, grading just over 5% copper equivalent. Now that's very difficult to find in the context of a current market environment. Any deposits like that have already been developed. And the reason this hasn't been developed is because of the infrastructure issue, the issue that this road wasn't there. There's no ability to access a deposit. So with the path now moving forward to advance the road, puts us in the potential to advance not just Arctic, but when I talk about Arctic, I'm talking about 70 miles of strike. So what we're really focused on is what is there beyond Arctic. And, if you go to our website, trilogymetals.com, and find the most recent presentation, you'll see information about these VMS deposits. And what happens with these VMS deposits is that they occur in clusters. So if you look at Flin Flon in Manitoba, if you look at Noranda in Quebec, if you look at Bathurst in New Brunswick, these are deposits that continued for multi-decades, for some cases 80 years, and they just continue to find more and more and more. And that's what we're hoping will repeat itself up in the Ambler Mining District. So we've got a great start with 46 million tons at Arctic.
This segment reveals why DoD made the strategic investment. They're not buying a single mine. They're securing an entire district with generational potential. Only 210,000 meters drilled over 70 years means this is one of the most underexplored VMS districts in North America. Compare this to Flin Flon, 80 years of continuous production, or Noranda, decades of operations finding successive deposits. VMS deposits cluster. Where you find one, you typically find more. Arctic's 46 million tons at 5% plus copper equivalent would be world-class anywhere, but in a jurisdiction with minimal exploration, it's likely just the anchor deposit. The 70-mile strike length is enormous. The strategic implication: DoD isn't just securing copper for 13 years, they're securing a domestic copper-cobalt district that could supply U.S. needs for generations.
Let's start with the road first. The road has, as I said, from a permit perspective, has been de-risked with the presidential decree, and what we're focused on now is approving budgets for the current year. And ADA has put forward a budget, and we're working with them to come to agreements on that budget and what work will be done, and the type of additional work that needs to be done to get us to an estimate on what the total cost of a road will be. So that is something that we're working with on ADA. But at this point, we expect to see significant expenditures on the road in 2026. We've also announced that we'll be conducting additional exploration in the Ambler Mining District. And so because of the limited access there, it's a fly-in, fly-out operation. You need helicopter support. So it's a fairly short exploration season. It runs from basically May to September. So we're gearing up for that. We'll be conducting additional explorations. We'll be doing some condemnation drilling. We'll be doing some additional follow-up. We'll be doing resource conversion, and we'll be looking at some additional anomalies that are out there. So that's part and parcel of a process. We're also working with our partner South 32 on really developing the permitting strategy. We hope to be able to get that permitting process started fairly shortly, and we'll likely look at this Fast 41 process, which is an expedited process to allow for the permitting of a mine. So that we've been working on that for a considerable period of time, and we're dotting the I's and crossing the T's to put ourselves in a position to commence permitting. So that's part and parcel of the work that will be conducted in 2026. And then lastly, what we'll be doing is
the 2026 catalyst timeline is stacked. 1. Road construction expenditures begin immediately. This is when investors see tangible infrastructure progress. 2. May-September exploration season targeting resource conversion and new discoveries across 70-mile strike. 3. Fast 41 permitting process launches. This is the expedited federal framework created specifically for critical infrastructure. It consolidates multi-agency review into streamlined timelines. 4. Feasibility study advancement from PFS to FS at JV level positions the partnership for a formal investment decision. The sequencing is strategic. Demonstrate road progress and drilling success during 2026, complete FS and permitting foundation, then make construction decision in 2027. Each catalyst de-risks and adds value incrementally.
To commence additional study work at the project to get ourselves into a position to make an investment decision as soon as possible. So we see a very busy year this year, followed up by a busier year in 2027.
One thing we didn't touch on here, which is important for context, is the precious metals portion. Well, frankly, all of the metals that Trilogy deals with are under within a secular bull market. Rick Rule, whom we often have on our channel, talks about how these markets play out over a period of several years, 5 or 10 years typically, and that we're just still in the early to middle innings of this one. Can you touch on briefly how such an environment financially affects, and you mentioned that in passing in the beginning, but how that affects the potential profitability of a company like Trilogy with that supportive environment?
It's a good point, and I'm happy to sort of go back over that point. So to give you a bit of context, when we looked at this project and we did our feasibility study, in 2023. Based on the pricing that we used in that feasibility study, the revenue breakdown was roughly 57% of the revenue was coming from copper. About 12% was coming from precious metals, and the balance of 27% was coming from zinc and a small portion from lead. If you look at it in the context of the current precious metals or the current price environment, it's still predominantly a copper mine. It's roughly 54%, but the silver component is now closer to 18 to 19%, and the gold component is about 10 to 11%. So you're talking about precious metals component of roughly 30%, and then zinc is about close to 15%, and lead is a remainder, which is less than 1%.
The 2026 catalyst timeline is stacked. 1. Road construction expenditures begin immediately. This is when investors see tangible infrastructure progress. 2. May-September exploration season targeting resource conversion and new discoveries across 70-mile strike. 3. Fast 41 permitting process launches. This is the expedited federal framework created specifically for critical infrastructure. It consolidates multi-agency review into streamlined timelines. 4. Feasibility study advancement from PFS to FS at JV level positions the partnership for a formal investment decision. The sequencing is strategic. Demonstrate road progress and drilling success during 2026, complete FS and permitting foundation, then make construction decision in 2027. Each catalyst de-risks and adds value incrementally. The revenue transformation is the hidden story that most analysts miss. In 2023, this was pitched as a copper-zinc project. Commodity exposure was concentrated. Today, it's effectively 3 separate bull markets in one asset. 1. Copper at all-time highs driven by electrification and supply deficits. Silver at $121, driven by industrial demand and monetary debasement. 3. Gold over $5,500 as reserve asset accumulation accelerates. The 54% IRR is exceptional for any project. For a permitted, government-partnered project with $4.4 NPV, it's almost unheard of. The negative cost copper concept means after crediting byproduct revenues, the net cost to produce copper is below zero, essentially free copper production subsidized by precious metals. Add borates 35 to 40 mem tons at 3% copper as future expansion, and you have a 30-plus year district.